Hi, everyone. Welcome to the Check Writers Room. 3 GPs, 3 angles, 1 hot take.
I'm Yasmin Cruz-Farine.
I'm Shalonda Armstrong.
My name is Sydney Thomas. Let's get into it.
We have a great show ahead. We're going to get into some interesting topics here for you all. We have, first of all, what's happening all around us, IPO Palooza. Everyone's announcing right now. And then we're going to get into, would you write the check? DevOps. And then we're going to explore a question from, one of our listeners. And finally, we'll wrap up with, what's bringing us joy, as we always do. So let's just get into it, ladies. You ready? So you cannot be in this world and not have seen the SpaceX announcement, everyone reading the S1, and then followed by Anthropic filing their IPO confidentially, selecting Morgan Stanley, Goldman Sachs, and JP Morgan. And then lastly, OpenAI and Brett, they can't be too, and Sam can't be too far off from Anthropic. And they most recently confidentially submitted their IPO as well. At this point, when we're recording, we don't know who's going to be running those books. But we have kind of the full landscape. And one of the things that was interesting in setting this up is the valuation. For Anthropic to just raise $900 billion and about to go public and raise more capital, and SpaceX with a $1.8 trillion valuation as well. And if you kind of look back to last year, in the Ernst & Young report, according to them, only $47.4 billion were IPO proceeds in 2025. That's up from $33 billion in 2024. So when we say unprecedented, I think we finally meet it. It's finally unprecedented. But digging into the dynamics more than just the headlining figures, what's your take on this environment, and how is it going to impact LPs? How is it going to impact the private markets? What are your thoughts?
I know everyone's excited because we just want the IPO market to open up. And I think we also need to take a pause. One, if we do get these 3 IPOs, can we actually absorb 3 public companies at these valuations within the public markets? And we will not know that for 6+ months. So even with the LPs who are excited for their liquidity, they still have a 6-month lockup, and we have no idea where these stocks are going to trade. We also know our underlying macro trends right now are not going in the right direction. Yes, we have the stock market at all-time record highs, but we were all there around 2007 when we felt like this. So we just need to make sure we're not going to find ourselves back in that position, because we're creating all of these imbalances that are just not sustainable long term.
I think, maybe more of an optimistic case, because I think the LPs that we're pitching, when I think about specifically how this impacts the private markets, invested in them so long ago at a valuation that was so much lower than the valuation that they're going public on, that they will still see some significant returns regardless of how much the stock changes in value. Because none of these are going to zero. OpenAI, Anthropic, SpaceX, especially SpaceX, now that we actually have their S1, the underlying fundamentals are interesting, but they're producing revenue. Starlink is a real company. Some of their underlying companies are real companies, not all of them, but some of them. And so it is, I think, really, it is a really cool time to finally see some of our investors get that liquidity back that they've been really stressed about for the last couple of years, because the private markets have just been completely cemented.
Starved.
Yeah, that's a better word. Starved. Starved for it.
Yeah. Yeah, but here's the thing. I feel like we're living in the gaslight era. So here we have the truth, and then we have the ultimate gaslighter, which I would name as Elon Musk, who's a hype man who wants you to see his gaslighting company, which, as Sydney just said, the underlying fundamentals kind of aren't that great. I don't think Anthropic and OpenAI are going to zero, but they're not making a profit, neither company. So that's just like something to say. But I just think, Shalonda, you're saying, well, we're in a tougher moment. And this could be the catalyst on the public side with index funds trying to absorb and own these shares in a frenzy, that volatility that's not great. But when you hear the pundits and the boards and the CEOs of these companies, I would say, Anthropic and is moving from a revenue perspective at a rate we've never seen before. It's unprecedented. But on the SpaceX side, other than maybe just one or two assets in the roll up, it's pretty much just burning cash. But when you hear the news and everyone talking, it's just kind of, up and to the right. And I just feel like, especially with SpaceX, we're being gaslit by the ultimate gaslighter in the gaslit economy. So I would not buy. But focusing on Anthropic, which I think is in a league of its own, I went back because we're early stage investors. And I'm nervous with LPs because if they just look at the roster of who's going to return capital to them, it's not a I would say it's an interesting mix. And Anthropic didn't even raise pre-seed or seed. They went straight to A. And I don't know if that's going to resonate with LPs like this, or if it says to them, like, we really should only invest in multi-stage because some of these, generational companies once in a decade don't even raise early stage capital. And they raised from just a handful of insiders. Then with Anthropic, the Series B was FTX, and then they chose who received the shares in bankruptcy. The judge and Anthropic chose, and they chose institutional investors that, are very well capitalized. So you really could only invest when Spark did, the other Yasmin, at Series C. And that's so far up the food chain from where we sit. So it really shows that if LPs just kind of look at who already invested, who's returning them capital, they might take a pretty one-sided view of the overall early stage market.
I think the other part is not being said out loud, but we all know, those of us that are close to this, is a lot of folks who got an Anthropic or OpenAI and have it on their, quote unquote website or fund, companies we invested in. That is an SPV on top of an SPV on top of an SPV, right? And so there's also how much stacking went into some of this as well, which is going to, as people are getting those returns and you're paying the fees and everything to keep that SPV going. And some people were taking like crazy 15-20% management fees on some of these SPVs. So there's a lot to unpack here. It was not obvious to invest in OpenAI or Anthropic when folks did, right? It was an outlier. It was someone being extremely contrarian. And so I hope LPs feel more comfortable of, let's continue to be contrarian and not go after what looks like the obvious winner here. And I understand LPs are incentivized differently than fund managers. But if our job is to be contrarian and right, then LPs need to understand, for you to get those returns, you have to also look for managers who can find contrarian and right bets, and not the ones that are going to see the same old safe bets that not all LPs, but I will say some of them are looking for, just so that they can get their bonus at the end of the year, because that's just not how this asset class is going to work. And definitely in the age of AI, it's only going to cause more of a disparity in that case. What are your thoughts,
I
Sydney?
so I think actually as venture has grown in scale, It has matured to develop actually multiple, almost like sub verticals within venture that are not based on thesis. It's actually based on AUM. And so, my thesis of if I was an LP today, I would almost have the way I've been talking about it to people is like I'd have my large cap managers and my small cap managers. So, I'd have a bet in one of, it's not all of them, but one of them, Andreessen, Sequoia, or General Catalyst, or like I would pick one of those as my large cap bet, and then I would pick a few small cap bets with emerging managers, generally sub $500 million AUM bets, because I think that's actually like where we are now. I don't think we are where it's either or. These LP endowments have the capital to invest in multiple strategies, and I actually think it's really smart to diversify your investment across multiple strategies.
Well, did you see University of Michigan owns a stake of OpenAI, and so they're going to be one of the winners. Whoever was, responsible for making that investment, and it was sizable. So, kudos to a public university, not
Can I
just the
say something about
typical.
that? Can I
Yes.
say something about that? There were some universities that were given the opportunity to invest and they chose not to. And they felt that they wanted to be so conservative with their book and it was too high risk for them. And this is the outcome of that. When certain universities are getting access to opportunities and deals that they have not traditionally had access to, there needs to be more education and more guidance on how to lean into those opportunities and not just constantly like shoo it off because it's not going to accelerate the endowment. It's not going to accelerate the innovation, the type of students you're going to attract. So I just hope that other universities are paying attention, especially the smaller ones, to understand that you have to get in the game and you have to get aggressive.
The culpability does need to be spread around, and some of that is OCIOs. But there was definitely a moment where the market was shifting, and the advice to a lot of foundations and endowments was to be conservative and to not be as mission oriented, because you see what just happened in the last inning. Like, mission orientation did not provide liquidity. And now that we have more miles that we've run, you can see that conservative advice backfiring on some of these ICs.
Maybe some folks need to think about the diversity of their portfolio and start breaking it up in a different way. To Sydney's point around LPs, a lot of the university endowments, they're LPs in funds. And so I would just go back to Sydney's earlier point, and maybe endowments just need to, tap Sydney and she can walk you through how you may want to think about your strategy when it comes to some of these bets.
We are in a dynamic world. I know that these organizations are under unique also like pressures from the differing federal funding cuts. Like there's just so much happening to these organizations that maybe previously they hadn't had to think about, and they've also grown to a scale that maybe they couldn't have even predicted in their wildest dreams. And so both of those things are true. I think they feel like they're coming under fire, and they're also quite significant from a just like AUM perspective. And so, how do we move with both of those constraints?
Well, there's a lot here to chew on, but we got to keep it moving. We'll continue to watch this story unfold, and we'll move on to the next segment, which is Would You Write the Check? And this sort of brings in some threads from what we were just talking about in terms of the inflection point post Claude Code, post Lovable, Cursor, all of these AI based companies that have commoditized code and therefore have impacted software as a service as an entire sector. So, one question I have for both of you is, does this mean that you should or should not write a check into a DevOps company. And maybe what we need to do is define DevOps,
Yeah.
because in my definition has been developer tooling. But what do you think, Shalonda, as someone who has a CS degree?
Literally, our resident engineer, tell us what DevOps is, please.
Okay, so in the enterprise software world, there is um, the code that you actually build, right? And you may have different developer tools to support that. And once you build it, you commit it. And now we use various tools like GitHub to commit the code that we've written. So just imagine you have a ton of engineers, everyone's writing different code on different things, and you need to commit and make it all make sense, right? And you commit that. But then the next process is how do you actually take the new code and how do you integrate it into production live code that's already existing? That is where DevOps lives. So traditionally, we have had a process for that, and there's definitely new DevOps tools that have come out, and it has been very critical because that is a whether you have a staging environment or a testing a sophisticated testing environment, that DevOps process is critical to make sure that nothing breaks once you move it into production. What has shifted is that code is no longer the moat with AI. And so when we're thinking about DevOps, is there room to reimagine DevOps? Absolutely. No one's going to vibe code enterprise software. Are you going to be able to vibe code things that may work for your team or maybe your department? Absolutely. But when we're talking about enterprise software, there's so much more that goes into it. That is going to require engineers, maybe not as many, but there's going to require engineers that are also going to be using AI to create some of their code to be more efficient with it. And the DevOps process also needs to get better. We're now seeing a lot of QA that's done by AI. I think the
Right.
problem here is we need to really understand how is DevOps impacting the workflow and is it actually accelerating anything? And I think that is the question that has not always been as clear with previous DevOps solutions is how are they accelerating that workflow where now that is the number one question.
So
Okay.
just to put a finer point on it, what, for example, a company might do in this space is the integration layer. So helping, one software speak to another. And that means on one side of the bridge, you may have smaller, medium tech software companies connecting to a larger, call it system of record, like where your data sits. So how do you see that world evolving?
Ooh. Okay. So I'm obsessed with Town. This is free promotion for Town. What it is all of the programs that I was building out one by one into Cowork in Claude are come almost pre-programmed into Town for someone like me because they're building it around people in tech, people in tech who are generally founders or small business owners in some way, shape, or form. And when I look at how it's doing its work, it is actually meshing all of these different AI tools on the back end, like Gemini, Claude, OpenAI, like all of these other systems. It's integrating to then like share with me the end result. And so to me, when I hear Dev, DevOps sounds like maybe it would be the thing that's helping Town communicate between all of these other AI systems and then spit out to me what actually I want to see. Is that what we're saying? Is that it?
So Yasmin, what she's talking about is the API integration layer. So that is when two different platforms are sharing the data amongst them to make it a richer data set so that you can operate. Cindy, what you're talking about with Town is basically they have found a sophisticated way to take the AI tools. It sounds like there's an API integration layer on top of it, and it's being able to accelerate to get you what you need and so all of that makes sense, but all of that is a piece, just a small piece of what actual DevOps is. So DevOps is more around Jenkins, GitLab, GitHub, like all of the behind the scenes of that prior to actually getting to that API execution that you're experiencing.
Okay.
Does that
So
make
this is
sense?
my hot take. This is my hot take. So I what we're seeing is I think we have a lot of investors who are trying to understand how the dust is going to settle and actually are kind of forced to be a little bit more technical than we've been in the past. Because a lot of investors with who haven't invested in DevOps or tooling in the past, I think you're just gonna sort of step away, and I'm seeing that. And so that might be what affects DevOps. But I have a contrarian perspective here, which is there's aspects of AI that's definitely untrainable, and I think the permissioning is not gonna go away. Compliance is not going to go away. What you're talking about, Sydney, is I think orchestration, and maybe I could be wrong because I'm also stepping into this as a generalist, and I think people are going to have agent slop, right? And I actually think that more people are going to gravitate towards kind of making their stack neater. But actually, I think instead of just stepping away and saying software is dead, we need to understand there's aspects like how you permission and compliance and the maintenance. Like there's still going to be update management, and that means everything may need to go through another pass in terms of being revalidated from a security perspective. And any company that is involved with that work, I think that's still a corner of the world that is investable in AI. So if you just say, oh, well, Claude and OpenAI are going to go public and they're going to eat the world, in the public market, you should just own those stocks and just forget about software. I actually think you're missing out on the opportunity of the aspects that in software that are not going away. My only concern is that it's going to be like the new femtech, whereas investors just don't get it. So it's hard for great companies to get upstream, I think, past a certain point because they're just going to be written off because they don't understand. Most investors will not understand the nuances unless they were a CTO. And even then, I don't think so because they haven't really written code in this era.
I think the other part of that is when you're looking at whether it's DevOps or any other type of developer platforms, it's really going to come down to two things. How proprietary is their data and how
Yes.
ingrained are they in the workflow? And that's it. We don't know what that code looks like behind the scenes, right? But they're very deep ingrained in the workflow. Now they're all the way in Sydney's workflow,
Yep.
right?
Oh,
Um,
I yes.
and yes, and they have the proprietary data because now they're not sharing what they've actually built. So that's all that you really need to lean into is answering those two questions. And to your point, Yasmin, if the founders can tell those stories clearly to investors, that
Right.
helps them understand where they are. But you're not going to expect an everyday investor, especially an investor with multiple funds, multiple portfolio companies, to understand and go deep on DevOps or managed packages or the process to
Right.
get to production. Now, I do it because that used to be my life as an operator, but that's not an everyday occurrence. And so I do think
Yeah.
with code no longer being the moat, it's also on founders to get better at storytelling around what you're building because you can't just lean on the code the way that founders used to in the past.
I think this is part of the problem. It's like no one knows what's on the Claude or Anthropic roadmap. It's like, are you going to go deep on integration, proprietary, like, years of what it takes to be approved as a managed package or to pass compliance? I still don't see Claude as being trained on that information, and I still think there's opportunity there.
We just started building out our own code base, and by we, I definitely do not mean me. I mean the engineer on our team who's really great. And so we have our first GitHub kind of like repository. And it's such a great point as we're talking. I'm like, oh yeah, you're right. Like, how do we ensure that this is stays updated. I don't think there's a world in which we have multiple engineers where like, someone's pushing different code than another person, and so we need to understand like how those two are integrated and beautiful. But I do think there's a world in which like this code gets it just breaks, or it's old, or it gets like it's something else happens to it. And so is there a tool that we could use as a small business that almost is like this ongoing updating, like QA, to your point that AI is doing more in this QA space? Or is it a DevOps tool, or is it something altogether different? I don't know, but it's actually something I'd also never even thought about buying before. And so I'm wondering if it's actually the opposite because AI has enabled us to host a lot of our own code ourselves. Like we're able to build this GitHub repository because now we have moved off of things like Airtable and onto our own, like we've built our own backend because of Claude. Now, do we need to buy a DevOps tool that we might not have had to buy before?
Yeah, and I think you're a part of the wave where for like a small business, it maybe makes sense. But there's going to be a lot of medium sized organizations that do this, and then it is going to break, and they're going to have too many agents, and then they're not going to be able to update. And then they're finally going to come to the conclusion that you are coming to right now, Sydney, that the build, partner, or buy proposition is not changing in this world. A lot of venture firms have a resident CTO, but most of us should not be building our own systems that we cannot manage over a long period of time. We're in our Black Planet MySpace era, but the chickens are gonna come home to roost. And I just pray I'm on the right side of some investments that everyone got wrong, but I also need some people to invest upstream with me.
So Yasmin is describing exactly the world we're living in right now, but no one's paying attention, right? So right now we have 50 plus years of technical debt living in enterprise software and legacy software. We have 65-year-olds, 70-year-olds that we keep bothering and asking to come back to their old job because we have code written in Fortran and COBOL that no one
Mainframe.
mainframes. We just keep changing the platform, right? That platform, I don't know how to update it. I don't know what to do anymore. Switching costs are so low. Let me go to this platform. I'll rebuild it out even faster now. And I'll do this X and Y and Z. All we're going to do is keep hopping to these different platforms with no landing spot around what are you actually building that's sustainable and can continue to scale. So while there are some, I know that there's a lot of conversation around SaaS and where they're going to live and everything, but to Yasmin's earlier point in the episode, software isn't going anywhere, right? And there is still going to be a need for a lot of these SaaS companies to exist. Their acceleration may be questioned right now, but as far as where they live within a lot of these enterprises, that's not going to go away. We still need a lot of these SaaS companies because they are just so deeply ingrained into how these enterprises function as a business, and it's not going to change.
Okay. I hear you guys. As someone who has come from, I think my background is I was in, government first. We did not have much of technical debt because we didn't build much tech. And then I went straight into startups. And so those are like my two experiences. I haven't actually had this experience of like what it's like to be at a large company where something stays kind of like the same until it breaks. And then there's the old guy who knows how to fix it. Like the only experience I know is we change everything every 2 years. I like being there where it's like, oh, okay, this is really, we found something better. Let's fix it. Let's do it. Let's move it. And is that not the point of technology, to continue to disrupt itself?
That no, that you're right. That is the point of technology. Also, Sydney, you just said you came from government. Government is the notorious ones of technical debt. You just didn't realize it. It could have been your badge, right? Your badging system. It could have been the way your email was set up. It could have been like any how your profile is being
Lack of
tracked.
single sign-on.
Yeah,
Yeah.
your single sign-on that never quite worked right, right?
Oh
Like
gosh.
all of those other. Think about all of your inconveniences you experienced while you were in the government. More than likely, that leads to some level of technical debt that was sitting in someone's system.
You're so
But I
funny.
think I think Sydney, it's really about incumbency, and I think what I'm saying, I think Shalonda's saying as well, is we think that the whole world is going to be fresh with new entrants, right? But what I'm saying is there's still going to be incumbents, and there's still going to be systems of record and a truth. And then you know that there are companies, you know, larger companies that have the M&A budgets. These startups don't necessarily always have M&A budgets, right? They're going to acquire companies, and part of, you know, one half of the company is on one system of record, and they acquired a company on another. Like they're not on Atio, for example. It's like we're on ServiceNow, and we acquired a company that's on Salesforce, and we need to integrate everyone. You think what they're gonna do is just create completely AI native company with 1,000 people? Like the CMO or the person who did the CSO, the strategy officer, is going to create the new system of record with all this new information? No, they're still the Fortune 50 guys. Like that structure is not going away, and they're going to need to be helped. And they have the budget and the money, because who doesn't have the budget and the money to spend 6 figures, 7 figures on enterprise software are the smaller guys. So I think that's some of what we're trying to figure out is like, what's the world in which, yes, there's a threat of new entrants, but the incumbents still exist.
Great example of this is Kirkland and Ellis, the law firm, just announced they're spending what
Yes.
I can't remember the number. Was it 500
It was
million?
like 40 million.
Something around building their own AI first tool
Yeah.
because they realize they can only rely on Harvey so much to the point where you're giving away your secret sauce. And so they realize like, okay, no, actually we may have to go back to the old way of doing this, and we have to, yes, there's a new type of technology, but there's still something that we have to keep for the enterprise. I think what they're doing is actually smart because you have to keep some of that data for yourself. You have to keep it proprietary. And if you keep feeding someone else's model with that, that is going to come back to bite you. And you can't charge those legal bills at the
Yeah.
same rate if you keep using Harvey at an enterprise level.
Google just did the same thing. What was it? $80 billion that they are looking for in additional capital to continue to invest in AI. And so I do think there is
Right.
a space where, like, yeah, the data is the most valuable thing. And so you need to protect it at all costs, even if that means building it in-house.
Yeah, I just think when Google went public, they didn't raise hundreds of billions of dollars, because back in the day you could barely raise 100 million when you IPO'd. So I think they're like, hey, instead of cheap debt, like let's do this too. So I actually think it's FOMO.
Interesting.
But we'll see if that, like, from a like cap table for them is the right move.
I think you're thinking they're going to somehow vibe code their way to a
No,
solution.
I know.
Like I
Yeah.
know they're going to really build something sustainable for themselves, similar to, unfortunately, the new version of a mainframe, right? Where they're going to
Right.
build their new version that's going to have to be maintained and updated. And maybe it's a lot simpler
Yeah.
now than calling back the
Right.
65-year-olds out of retirement.
They'll have engineers. It's not like the use case where folks are vibe coding and they don't have engineers in sight. The other thing that was an interesting stat that I heard recently, and I don't know if I have it completely right, so it might be in the show notes, but there was like an MIT publication that overall coding generation's up 180%, but only 30% is being deployed. So it goes back to the point that you really do need an engineer to be a human in the loop here. Like, just because AI generated, you know, 200% more code and you can ask it, oh, is it broken? Where's the bug? Doesn't mean on an ongoing basis that you're not going to need a human in the loop to like be able to decipher what's relevant. So let's move on to the next segment. We have an AMA. We have Kenny from Charlotte has a question for us, which is, I am a new founder building a software which will be an autonomous grocery app. The problem statement that I'm leaning into is no one wants to figure out what they want for dinner and order their groceries. Do you have advice for someone who's just starting out on things they should know about entrepreneurship?
As someone who invested in one of these grocery delivery apps that
Okay.
went public, shout out to Instacart. I think you really do need to understand who your customer is with grocery delivery. And that is very nuanced. It is not just every person walking down the street needs to go to the grocery store. You need to understand the buying habits. You need to understand how they think about various parts of the grocery store experience, what they're looking for in various sections. There is, I will say, I learned more than I ever want to know about grocery delivery, being an investor with Instacart, because of how much they understood the experience from the moment you open the app, what time of day you open the app, what day you open the app. Like, there's so much that comes with this. So I would say really, really take the time to understand all aspects of the business and then really hone in on what the customer is looking for so that you are making sure you're solving that problem the correct way to get enough traction to continue to build.
How do you all feel about wait lists? Because in some talking to this founder, and just to give some generic advice, they were talking about their wait list, and I said that that is a moving target. Like, you can have a wait list on the consumer side with 10,000 or 100,000, but until there's a willingness to buy, it can be somewhat of a vanity metric. And what seems like a lot of demand for one investor, for example, may not be enough demand for another. And I kind of have mixed feelings about wait lists.
What a wait list tells me is that this person has is done some amount of hustle, because you can get a wait list through so many different ways. You can say, hey, friends and family, I'm about to launch this thing. Can you sign up for me? You can say, hey, put it on, I don't know. You could start buying leads online. You can get it Apollo, which is another CRM tool. You can just start downloading emails and say like start putting them on a listserv. And so I think to me, what it is like a way to confirm that this person has done some amount of work to show that they're in it. Does it actually translate to any revenue? I would not actually make that calculation at all. I would say this is just like this is kind of like almost like a checkbox. But I do want to bring it back to something, yes, we were chatting about in the like pre-call around what it looks like to be a great founder, because I think the question is like more generally like just
Yeah,
how to be like, what advice would you have when you are a founder of something? And
right.
I think the answer I keep coming around to is like you need to be good at trying things and failing at things and then getting back on the horse and trying again. I really think it is that simple, because you just don't know what's going to work. And it sounds simple, but I've met so many people who can't are afraid to try anything. They're
Yeah.
afraid to try anything new. They try something, their heart would be broken. if they tried it and they failed it, and so they don't even try it.
I have one tactical piece of advice. I think, Sydney, what you're saying is just be as agile as possible. And I would say limit your assumptions to Shalanda's point. Whatever you think you know about who your ICP is until you're actually out in the field and in the arena, you don't know. And that, just try to keep that as front of mind as possible, and that will give you the freedom to try and some things not work in the kind of exercise of learning, being an active learning person. But one tactical I have for founders who are just starting out is, if you get to the point where you're raising, don't ask VCs for an NDA. For me, that's an automatic, I'm not even looking, because you don't know, and it shows how naive you are. So that's one gem I have for all founders.
Please take that gem. Please write it down, put it on a sticky note, put it on your mirror. It's not a one size fit all, but there's a really, really small percentage of companies that actually need an NDA before they're having any level of conversation. Also, to Cindy's point around just being afraid to try and fail, I absolutely agree with that. I think the other part of that that doesn't get talked about enough is you have to be able to really know who you are, and you have to confront who you are. And that is not easy for 99% of people to actually confront who they really are, their choices, their patterns. But until you get to that point, you are just going to take everything that is unresolved that you haven't dealt with, and you are going to put it into your company subconsciously. We all three of us struggle. We have our own separate conversations of how we get out of our own way. So it's not something that is just to founders. Everyone has to go through this exercise when you are trying to build something, and you have to accelerate your growth both personally and professionally.
So, what's bringing us joy? I would say we are in our double digits. We've already, surpassed 10 episodes. So, we are working towards our 21,000 hours, however many hours Malcolm Gladwell says we need. So I'm proud of us for sticking with this and hopefully building a great audience that will stick with us as well. What about you?
I did a taste of Barrio Logan, which is a neighborhood in San Diego. It's like this historic Latino neighborhood in San Diego. And they did they call it Taste del Barrio, which was really cute, or Sabor del Barrio. And 40 different 40 different restaurants all signed up to do this. And it was everything from like a tamales lady, like not even like a storefront, like like a tamales truck, to a taco truck, to a fancy ceviche place, all in Barrio Logan. And it was just so fun. We had like the lowriders did like a little like parade. It was just lots of fun.
I love that. I love that. Of course, I am going to say I love the energy of the Knicks being in the finals. Yasmin, just
Come
bear with it,
on.
okay? Just you got
I'm
to
in
live
the
with it.
Lone Star State by myself with the Spurs.
But no, I do like to see the joy that the Knicks is bringing to New York City and the energy. And I will say, and again, I'm not a Knicks fan, but there is something special about when the New York Knicks are in the playoffs, and the way it unites that city
Yeah.
is
Right.
something to just appreciate and marvel at. And I do think it was unnecessary for the gentleman who lives in the city I live in to take himself to New York for game 3 and take that energy out of the city was just unnecessary. And so I'm hoping that they're able to regain that in game 4. And then I think the other part of just giving me joy is I'm not sure if you guys have followed this, but J Lo did a social media viral clip
She
around
did.
what actually makes a New Yorker, and she said it's someone that has to be born and raised in New York. And while I will not argue the point of what makes a true New Yorker, I will say it opened up this conversation that I think is interesting around what actually makes you um, what belonging looks like to a major city. And
Hmm.
I have often said that I live in DC. I've been here 20 plus years. I am not a Washingtonian. I am not a DMVer. I will always say I am a Detroiter. That's where I was born and raised. And it is, yes, I love my city, but it's also because there's just something around being in a place in your formative years and how it shapes you. And I also understand the other side of the argument where if you've been in a city for 20, 30, 40 years, you're also very much ingrained in that city as well. So I just think there's a different type of conversation that's happening around belonging, which I love because I think it's one that we've never had, but it's something that we're all searching for. So that's what's bringing me joy right now.
Well, with that, it's been a wonderful key time together. We talked about whether or not the IPOs are an LP distraction or a time for LPs to focus. We talked about DevOps and what DevOps really is. We finally know the true definition of DevOps. And I think I gave away some, and Shalonda confirmed it, some secret sauce about what's investable in the untrainable aspects of AI. And then finally, we have some advice for anyone who's starting a company. Thank you so much for tuning in. We'll see you soon.
That's the Check Writers Room. Special thanks to Louise Fogo for editing. Subscribe to our newsletter and view show notes at checkwritersroom.com. Leave us a review wherever you are listening.